Check. Yeah. Principally or philosophically or policy-wise, there has been no change between 1961 Act and 2025 Act. But for certain terminologies, but for certain minor deviations, which we will see today, there has been no change in the policy itself. There is no change in the policy itself. But one of the greatest change which we have to get used to is the new section numbers. Like I have written for IPC, all these days we used to talk about Shripadore 420, right? 420 has now become 318. Now somebody ನಾನು ಸುಮ್ಮನೆ ತಮಾಷೆಗೆ ಒಂದು ಯಾರಿಗನ್ನ ಇವನು ದೊಡ್ಡ ಮಹಾ 318 ಅಂತ ಹೇಳಿದ್ರೆ ನಾವು ಅರ್ಥ ಮಾಡ್ಕೋಬೇಕು. So what I mean is 420 has now become old, 318. So while it may be so, all of us are so used to 192 deductions, TDS, 194C, TDS on contractors, 194H, commission. So like that, we have got so many sections which are now 269SS, 269T, which we are very familiar with. All these will undergo a change. All these will undergo a change. But is there a change in the limit of, let us say, 20,000 rupees of cash that I can take, or 48.3, 10,000 rupees? The answer is no. Except for the change in the section numbers, there is no change whatsoever in the compliance level. Of course, how do I remember that? Very difficult. You have today certain AI or other calculations. You have got what is called as a click of a button. You can go to the new section. You press the old section, it goes to the new section. Vice versa is possible. So, but certain things are very difficult. For example, 194H is serial number 10 under subsection 1, which under a table in section 393 subsection 1. So you'll have to say so many things: serial number, table, and section and subsection. I mean, that is a very difficult thing for us to remember. We will see that. So recalling is very difficult, but understanding is very easy. If you go to read that, it will be very easy. A lot of formulas and tables have come in. So what is the basis of 2025 Act? It is becoming leaner. It is becoming leaner, put on a treadmill. 3 approaches adopted: eliminates intricate language, removes redundant and repetitive provisions, and reorganizes sections logically. Provisos and explanations removed, procedural aspects and specific details prescribed through rules. Now the difference between last time when I spoke and this time is the bill has become an act, and for the act there are draft rules. Draft rules, like 1961 Act has a 1962 rules, 2025 Act has got 2026 rules. I mean the rules of 2026. So we have rules and we have forms. One of the interesting rule is Rule 6DD. And those of you who are practicing in income tax, you will understand Rule 6DD is the exception to section 40A3. 40A3 only 10,000 rupees if I have to pay. However, I can pay more than 10,000 rupees based on the exceptions given in Rule 6DD. Even if I have paid other than the account paid check, account paid draft, the exceptions are provided in Rule 6DD. That Rule 6DD today, interestingly, is Rule 26. Easy to remember because it is coming out of Income Tax Rules 2026. Remember like that. The other rule, the other I should say the other form for me, which I use day in and day out, is Form 3CD, Form 3CA, the tax audit report. 3CA and 3CD, which popularly is signed by an accountant, in 2026, what should it be? It is Form 26. At least one rule and one form you know. One rule. Rule 26 is Form 6, erstwhile Rule 6DD, and the Form 3CA, 3CB, 3CD has now become Rule 26. So that is the take-home point. So previous year and assessment year concept removed, tax year in place of previous year. So that is the best thing that has happened. We don't have to confuse, because whenever I used to tell my assistant to go and get 25-26 file, he used to get me the financial year 25-26. Then I had to break him in head and tell 25-26 means assessment year. Now there is no such confusion. Everything will be tax year. Tax year in place of previous year. Accordingly, all dates are linked to tax year instead of assessment year. Why I have to tell you this is, now earlier if you remember, we had a cutoff 3 years from the end of the assessment year. 3 years from the end of the assessment year will now be in the new act 4 years from the end of tax year. You understand? For 31/3/26, the assessment is 31/3/27. From there, 3 years means from here it will be 4 years. Initially, we felt that we got one more year extra, but it is not so. Point to be noted. So this is an old wine in new bottle, maybe a smaller bottle, maybe more, what should I say, concentrated, more concentrated. Simplification guided by 3 principles. Textual and structural simplification, no modification of tax rates, no major tax policy changes. Imagine if there were any changes in the tax policy, they should have come out like every budget they come out, memorandum of changes and reasons for change, they should have come out with like that. So there are no changes. So therefore, between 2025 Act, and the 1961 Act, whatever is there in 1961 Act with less number of words has come in 2025 Act. Policy continues, new regime continues, old regime also continues. We thought that the old regime will go with the new act, but the old regime continues. One of the reason for the old regime to continue is section 10, which gives exemption for MPs and MLAs. The salary of MPs and MLAs, the allowances that they receive is exempt from tax under section 10. So if that goes off, the MPs and MLAs have to pay taxes. So that is the reason why old regime continues. So 5 heads of income to continue. The 5 heads of income will continue. No change in residency law. Some of the newspapers said that, that there is a change in the residential structure, but the answer is no. There has been no change whatsoever. Maybe they have not updated the Budget 25 or the Finance Act 25 changes, and therefore they are talking that there are changes. The changes have already happened in the Finance Act 2025. No change in the ITR filing deadlines, unless of course you come to the Budget 26. In Budget 26, they have given one more extended timelines, we will see. No change in the income tax slabs or the capital gains. Tax audit by a chartered accountant. Special audit for valuation of inventory by the CMA. So that is continued. The earlier section was 142(2)A, the special audit of inventories by cost accountants, which is now going on to be called as a new section 268(5) clause 2. Various aspects of compliances for respective years mentioned in repeals and savings. Now it is not, if you understand that 1961 Act goes away, does it mean that the sins committed under 1961 Act will go away? Whatever black money have done under 1961 Act goes away? The answer is no. We will see that a bit later on. So let's go to the starters. 2026 as assessment year. Now one of the challenges that we will have is 26-27. That means in the next 16 days, 26-27 will be the tax year for that year, and that will be the assessment year for this year. For 25-26, it will be the assessment year. There will be 2 26-27s concurrently going on for next year at least. What should, so what anta helidre, today, today is the last date for paying the advance tax. Today is the last date for paying advance tax. If you by mistake in the challan when you are paying, you use 25-26, it will go to last year. It should be 26-27. So you have to be very careful when you are filling the challans for tax payments. You will have to inform all your office assistants to fill the correct year when you are filing the advance tax or the TDS also, because from 1st of April, the TDS thing will kick in. For this year, the last date is 30th April. Maybe for April 7th May. When you are filing on 7th May or 30th April, you have to press the right assessment year. If it is pertaining to financial year 25-26, it is assessment year 26-27. But if it is pertaining to 26-27's tax that you are paying, it will be tax year 26-27. You will have to be aware of that. Read 2025 Act with the formula. I always keep telling. I told you that 25 Act has become simpler. If you don't understand anything in 1961 Act, read the corresponding section in 2025 Act to understand it better, because it is given in the form of a formula or a table and things like that. Sometimes the reverse may also be true. Last budget, if you remember, has changed both the 1961 Act and 2025 Act. Until 2025, whatever was there in the 1961 Act came in 2025 Act. But from the budget 2026, which was announced by Madam on 1st of February 2026, certain things have come in the 1961 Act and the 2025 Act, but certain things have come only in 2025 Act. We will see what they are. Okay, so you must understand that when I said 1961 Act and 2025 Act are the same, they are same only up to 2025 budget. From 2026 budget onwards, there are certain aspects which are same, but 2025 Act has become different from the 1961 Act. Am I clear? Okay. I will show you what they are. So therefore, this year we have a very unique situation. I have my tax partner Chirag with me here. He will have to buy two income tax acts. The 1961 Act also, because there are certain amendments done there, and the 2025 Act also going forward. So purchase two sets of income tax act and rules. And the entire act got changed because they never wanted, how many sections are there in the new income tax act? How many sections are there in the new income tax act? You will see that the last section is 536. Although in 2021, in the 1956, in the 1961 Act, there were 298 sections. So 298 sections has become 536 sections. But we are saying number of sections have got reduced. Now, what has actually got reduced, you must understand, what has actually got reduced is 44 AD, 44 ADA, 44 AE. All these were considered as three different sections. Okay, but within forming part of 298 sections under the 1961 Act. In the 2025 Act, all of them are made different. So that is why the number of sections have increased. But actually, so many sections have got deleted from the 1961 Act. So many sections have got deleted from the 1961 Act. They don't have any A, B, C, D. But with the budget 2026, there has been a new 354A. So ಎಷ್ಟು puncture ಆಗಿತ್ತಲ್ಲ, 1961 Act was thoroughly punctured, and they had put the puncture and made it into, every year they used to make it into a new act. In 2025, the first puncture has happened in section 354. Now for the CA exams, it will come from May 2027. I'm sure even the ICWA exams also something like that. I pity the students who are actually reading the old act, knowing fully well that it is not going to serve any purpose, in the next 1 year. I mean, so be it. 536 sections in both 2025 Act and the bill. Now, last time I spoke about the bill. In the bill also there were 536 sections. Now in the Act also there are 536 sections. So quickly let me go through the Finance Bill 2026, which has yet to become an Act. Please understand. The Finance Bill which Madam presented on 1st of February 2026 is there, which will amend the Income Tax Act of 1961 and 2025 Act. So in that, with effect from 1/3/2026. Please understand, why did they say from 1st March 2026? Because if they said 1st April 2026, then 1961 Act is repealed by then, right? So therefore, they have to say from 1st March 2026. For the first time, we have seen an Act being amended before the year itself. ITR filing due date extended from 31st July to 31st August for non-audit business income cases. 31st July, 30th September and 30th October. So we have October and November. So these are the filing dates that we have. They have also introduced one more for non-audit business cases, 31st August. So it will be applicable for 31st August 2026 itself. That means financial year 25-26 ka income itself. Due date for filing revised ITR extended to 12 months from the end of the relevant tax year with the fee. Updated ITR allowed when loss claimed. Updated ITR could be filed for the last 4 years. From loss to loss, it was never allowed. So now they have allowed from loss to loss also. Updated ITR can be filed after reassessment notice is issued by paying an additional income tax, and penalty for under or misreporting within the assessment order itself. This is very dangerous. The assessment orders that used to come, they used to say that penalty order will be issued separately. So from now onwards, when I say from 1/4/2027, order is issued from 1/4/2027, the order itself will say what is the additional penalty that I have to pay. So this has got changed both in 1961 Act and the 2025 Act. Let's go further. There are changes only in the Finance Act in the Income Tax Act of 2025. Please note, at least these 13 changes and something more, which are not very common, so I have not taken that. These are the changes which will impact only the 2025 Income Tax Act and nothing in the 1961 Act. So we will see what they are. ESI and PF employees contribution. ESI and employee, where is the HAL, sir? One of the biggest problem is if I paid the 15th on 16th, it never used to be allowed under the Income Tax Act. permanently. It was a permanent disadvantage. So from 1/4/2026, if I paid it on 16th, it will still be allowed. Up to what date? Until the filing of the income tax return. After the next date, it will not be allowed. That is okay. If you should not go so much of a delay, the website misbehaves on 15th. So if I pay it on 1 a.m. of the next day, it will be permanently a damage. So that damage has been controlled. MAT reduced to 14% and made as final tax with no future set off for corporates. So which means they are nudging everybody to go to the new regime. Interest not deductible. Interest not deductible against income from dividends and mutual funds. If you have invested in shares of a company by borrowing, that interest on borrowing will not be an allowable expenditure against the dividends. Until now, you could have claimed 20% of the dividend income as a deduction. So from the new act, from 1/4/2026, this year, for financial year 25-26, you can still claim. From next year onwards, you cannot claim. Why? Because I think they don't want people to borrow to invest in stock market. It's a moral science. Moral science from madam, that's why she said STT I am increasing. Why am I increasing STT means they don't want people, they have increased the rate. What they said, people are losing heavily in options and futures. So to stop that, they are saying I will increase. In spite of that, people do that. That's a different issue. So buyback of shares taxed under capital gains instead of dividend income. Venkatramana sir was telling that the best investment that he has done is investing in sovereign gold bonds. Sovereign gold bonds, if you stay invested from as an investor till the maturity, then and only then the capital gains will be exempt. If you have original investor, if you have invested and sold to somebody in the secondary market, then you will not, or a person who bought it in a secondary market and sells also will not be eligible to get. Changes to TCS rates. The TCS rates earlier there were 1%, 5%, 20%. Different rates, 2%. Now what they have done is all TCS rates from 1/4/2026 will be 2% only. The only exception is for cars and other specified goods, it will be 1%. And for LRS, for any other purpose other than medical and education, if you are spending goods money outside India beyond the cutoff, it will be 20%. Otherwise, all TCS will be at 2%. Lower or nil TDS certificate through electronic, residential, single window. One of the 10th point is very interesting. If you have filed your tax audit report belatedly, or TP report, or the specified financial transaction report belatedly, then I'm afraid that you will have to pay fee instead of penalty. Which is better, fee or penalty? Penalty is with the show cause notice. So far, for any delays that I have filed my tax audit report, there was never a show cause notice and never a payment. Fee is automatic. Fee is like you pay then and it is like your, what is that? No, when you pass your car through the toll gate, only if you pay. Otherwise, you will not be able to, the gate will not open. Just like that, here also, only if you pay this fee, the gate will open for you to file the income tax return or your tax audit report. So fee is definitely a very good move from madam's side. That's why, please understand, whatever I have done here, blue and red indicates like that. Red means bad for me. Blue means good for me. So like that, there are certain changes which I just wanted to tell you that with from 1/4/2026 in the new Income Tax Act, only it changes. So we have seen this slide last time. Section 1, the new Income Tax Act applies to the whole of India. From in the next 15 days or 16 days, it will be applicable. There is a 535, section 535, which we call it as the ROD section. What is this ROD section? Removal of difficulty. Removal of difficulty. In the process of, those of you who are dealing with Companies Act, you will see when the Companies Act 2013 came, they said that there were a lot of mistakes within the apparent mistakes within the act. Instead of using and, they have used or vice versa and things like that. So to make those changes, they don't have to go back to the parliament to make the amendments. The ministry itself can make the changes. So that power has been given to the ministry only for 3 years from 1/4/2027. Section 536 repeals the 1961 Act and says various aspects of compliance for respective years mentioned to safeguard all rights and liabilities accrued under the Income Tax Act 1961. What does this mean? Now please understand, from 1/4/2026, the new act comes into picture. Let us say I have a partnership deed, and my partnership deed has what is the maximum remuneration that I can pay, what is the interest that I can pay, and I will refer to 1961 Act. Should I now change my partnership deed? Because from 1/4/2026, should I change my partnership deed because the deed is referring to 1961 Act, Section 40B(5) tells what is the limitation up to which I can pay the remuneration, 12% interest, referring to 1961 Act. What they said is this repeal and saving tells me don't change any one of them. So what it says is that Section 536(2)(j), any agreement entered into, a partnership agreement, for example, or a double taxation avoidance agreement already entered under the 1961 Act. Appointments made. Now all of you know, Mr. Lakshmi Prasad is appointed by the government. Similarly, any commissioner of income tax will be appointed under the 1961 Act. All these issued under any provision of the repealed Income Tax Act, 1961 Act, shall, so far as it is not inconsistent with the corresponding provisions of 25 Act, be deemed to have been entered into, made, granted, given, or issued under the corresponding provision of the 25 Act and shall continue to be in force accordingly. What are the things? Agreement, appointments, approval, recognition, circular, CBDT circulars, directions, instructions, notifications, any order, rule, or any scheme framed thereunder. So we don't have to really go back and change things. It will seamlessly continue. So as I told you, a lot of sections have got changed. The tax audit section, which we were talking about, 44AB, has become section 63. The presumptive taxation under 44AD has now become serial number 1 under table under section 58 subsection 2. Now I have coined it as 58 bracket 2 T1. This is my terminology. That is serial number 1 under table under section 58 subsection 2. So that is the simplified version. 44ADA for specified professionals, it is 58(2) table serial number 3. So like that, 269SS. You know what is 269SS? I cannot take a loan of more than 20,000 rupees in cash. If I take it, I have to pay that amount as penalty. Those of you who are familiar with the Companies Act, Section 185 of the Companies Act deals with the loans to directors, restriction on loans to directors. So for you, easy to remember, 269SS is on loans, and 185 of the new Income Tax Act is also on loans taken. 185, 186, 188. So there are 16 schedules in the new Income Tax Act, and what they have done is they have simplified Section 11, which was erstwhile Section 10. Just now I told you Section 10 of the Income Tax Act 1961 deals with exemptions. And exemption section is, at least I have written there, 50 subsections in 1961 Act running into 107 pages. Section 10 runs into 107 pages. What the new Act has done is, it has just made it into 1, 4, 1, 2, 3, 4, 5, that's all. They have moved everything to schedules. Everything to schedules. Now let me dissect the new Income Tax Act. I did this last time also for the bill. Now I'm saying they have acted certain things on simplification, some things on project improvement, and they have rectified certain errors in the bill. And also changes in 2025 bill has also happened, and changes through the Finance Act has also happened. I am not talking about 3, 4, 5 today. I will talk about 1 and 2. So they have simplified the Act, as we already seen, 819 sections to 536 sections, 47 chapters to 23 chapters, 14 schedules have got increased to 16 schedules, because I told that a lot of things have been moved to schedules. Tables, earlier there were 18 tables, now they have become 57 tables. Words, 5,12,000 words becoming 51% only. So 49% reduced. Formula, 6 formulas to 46 formulas. And then pages, 823 to 576. The income tax, I should have put in one word. What is the reduction in the income tax that I have to pay? For the same income in 1961, I will have to pay the same tax in 61 and 2025. There is no change whatsoever. With effect from 1962, whereas this is from 1926. I like 62 becoming 26. Easy to remember. Yeah. Simplification in the language. Notwithstanding anything. I think this, if you go and tell anybody, the normal English, we don't use this word notwithstanding. You know, notwithstanding the delay in the first session, the second session ended on time. Do we say like that? No, we don't say like that. So we generally say irrespective whatever happened. So they brought in the normal English rather than the notwithstanding English. Provisos have all been replaced, explanations replaced with subsection. Complexity and lengthy provisions have now been made into formulas. Provisions related to common topics scattered across. Trusts, for example, was there in section 11, section 12, section 13, then section 115 and things like that. All of them have been brought into related, under the related headings. How did the 25 Act become leaner? How did it become smaller? Many provisions moved to rules. What was earlier in the Act have been moved to the rules. Repetition avoided by cross-referencing. So many things were referred in every section. For example, 115 BAA, BAB, which deals with the new regime for companies, told the conditions, more or less the similar conditions in 115 BAA and BAB. Under the new Act, it is all moved to section 200, 201 and 203. 115 BAA, BAB is 200, 201. The conditions are told in 205. So they said you refer to that section for the conditions. So certain common conditions have been moved to a different section altogether. Definitions have been consolidated. Earlier certain words, like for example specified sums, specified advances under 269SS was defined both under 269SS and 269T. Now what they have done is all the definitions have been moved to at the end of the chapter. At the end of the chapter, whatever words used in that particular chapter has been moved to the end. So the point for those who are reading income tax for the first time, you read it from the last, because the definitions are in the last now. Now we'll have to see that particular thing. So beware, read entire chapter to understand implication of the sections, as last section in the chapter could define relevant terms required to understand the section. So read from the last. So footnotes, of course, have got reduced. So project simplification, running words have been made into properly structured words. Previous year assessment year into tax year. Exemptions under section 10 is now section 11, read with schedule 2 to 7. Deductions under section 80. You remember so many deductions were there. Hardly we are going through in section 80, because once you come to the new regime, no deductions available. So old regime, only 15% of the people still under the old regime individuals. For them, they have to refer to section 121 to 154. All of them have become, one section has become many sections. 34 sections for one section. For example, 80JJAA, a very popular deduction which you can claim for new employees. Those of you who are not claiming, please read 80JJAA. You will be able to get deduction of 30% of the salary that you pay to the new employees. You can claim it as an additional deduction. Okay, so for that has now become section 146. 80M has become 148. Like that, section 80 series have all been broken down. Consolidation of the provisions for NPO. Earlier it was called as trusts and institutions, charitable trust. Now they're called as non-profit organizations. Staff welfare reductions consolidated. And certain improvements have happened. Relative definition. This is my popular thing. Who is the relative under the Companies Act? And under the Income Tax Act? Aju Baju, Aage Piche, Upar Niche. So Aju Baju is husband and wife. Aage Piche brother and sister. Upar Niche is lineally ascendant and lineally descendant. Now the question that was always asked is whether my lineally ascendant includes my mother's mother, or should it go only to my father's side? Yemantar sir? Both, sir. Now both, Income Tax Act unfortunately followed the Hindu Act, and under the Hindu Act only father side is considered. Father side is considered. And then we used to argue it may be so under the Hindu Act, but Income Tax Act is not for only Hindus. So it should be uniform. So therefore we used to say mother side should be included for two reasons. One is Income Tax Act is not for Hindus alone. And number two is that my mother's mother saw me first before my mother. You understand what I am saying? Isn't it? So if you exclude her, she would throw me into the dustbin afterwards. I mean, imagine she is the one who has taken care of my mother during the delivery and seen me first. Now, under the new Income Tax Act, they said lineally ascendants, maternal and paternal. They have put it to rest. So now please understand, if somebody says that maternal was not a relative under the 1961 Act, go back and tell that there is no change between 61 Act and 2025 Act. 2025 Act, what was told is only clarifying the water matter was there in 1961 Act. So therefore, under the 1961 Act, also maternal is a relative. So like that, you can take certain advantage of the new Act to clarify the 1961 Act. DRP direction, lower deductions, name change, tolerance range changes, exemptions of certain things. And for the department's benefit, they have done certain, when a reassessment can happen, they have added 2 more scenarios. And they have also brought in the virtual assets for the purpose of income tax. They were always, the VDA, what we say, is already a taxable asset, but they have specifically brought it even during search and seizure. Okay, for department benefits, some transfer pricing adjustments. So let me just go through practical challenges. The practical challenges: section numbers, forms and rules all changed. Need to unlearn and learn. The problem with chartered accountants and cost accountants is learning is no problem. Unlearning is a problem. Yenandra, you go to USA and try to drive the car, you'll understand what it is. Wherever you go, when the right side driving iruttalla, alli nimage bhayankara problem agutte. Now driver seat alli irode beda. Pakkadalli idrunu namige ontara, it becomes, then they're saying, why are you? Because they are going on the right side and taking a free right turn. Namige a free left turn. For them, it is a free right turn. So that is a problem that we may face when we are actually going through the 2025 Act. Section numbers which we learnt gradually from BCom, CA, CMA, and every new finance act incrementally, will also have to read all together new. So it is a great advantage from the last bench to the first bench, because people sitting in the last bench are all youngsters now. So they will be in a great advantage because they don't have to unlearn. They just have to learn. Now remember all section numbers at once. Use alias or knee culture. So knee culture, I'm sure, madam, Aishwarya Bachchan. Knee Rai. You know that? The knee is a word which we used for a married woman. What was her surname before marriage? The knee is a culture. So like that, I have to just now say the new section 185. The moment I say 185, I have to say alias or knee 269SS. The previous section. So I will know the previous better than the new. That's what I wanted to say. Tables in many places instead of explanation. Easy to understand, but difficult to quote and recall. Now just see this. How are you going to tell this? What was such a simple commission and brokerage 194H will now be serial number 1 under the table under section 393(1). So I will just remember 194H. So people who have read 1961 will take 194H. Imagine 5 years down the line, you have a new CMA coming or a chartered accountant coming. You say 194H anta helidre avanu ankoltare nam sir ge huch hiddu hogbidre. That is a problem. That is, you will have to keep on relating like that. Very, very difficult. Various TDS sections. So 194R is now serial number 8, clause 4 in table under section 393(1). So easy to understand. Tabular is easy to understand, but to recall that, you will have to do a great effort. 44 AD, the presumptive taxation, is now serial number 1 in table under section 58. Various TDS sections now on table. Buyer and seller. Normally buyer and seller means what? I am buying, you are selling. But buyer and seller has also been defined under section, under that particular section 402 subsection 6 and 402 subsection 33, which is at the end of the chapter. Buyer means whose turnover is more than 50 crores. You have to do that 0.1% TDS. Definition of terms used earlier given under that section itself, but now given under a separate interpretation section at the end of the chapter. So this is how the TDS table would look like. So I will not get into the details. Now definitions spread across various sections. Earlier it was under that particular section itself. Now there is a separate section under the New Income Tax Act. So I'll just take another 5 minutes with the permission of Mr. Mallikarjun Gupta ji. Okay. I'll just also, although Vishwanath Bhatt wanted me to talk on the New Income Tax Act, which I've just given an introduction, I will also get into the rules and forms. Drafts have come out. The draft rules and draft forms have come out. It was released on 7th February. The last date for comment is 22nd February, already gone by. It's under compilation. The new rules and the forms will come any moment. Any moment we can expect the final rules expected in the first week of March. That's what they said. It's already now second week gone. Feedback sought and larger content policy preserved. So mapping utility, I said you press that particular thing, it will take you to the respective rules and sections. Important rules. Rule 8, there were 511 rules in the 1962 Act. In the 26 Act rules, it is 333 numbers. Popular rules, for example, 8D has now become, rule 8D we were using for the purpose of exempt incomes. The expenditure, there was a rule I had to apply. Now it is rule 14. Rule 6DD has now become rule 26. Important forms. The important forms, 3CA, 3CB, 3CD has now become form 26. 26AS, popularly we call 26AS. Now 26AS has become 168. 15CA and 15CB. That's sir? The AAS will continue as AAS. That was not under any particular form. Right? So it was AAS only. So 26A has become 168. 15CB, which chartered accounts give as a certificate, is becoming 146. 15G, 15H. From 1st of April, the new form that you have to give is 121. 121. What is the difference between 15G and 15H? H ವಯಸ್ಸಾದವರು 15H ಅಲ್ಲಿ ಕೊಡಬೇಕಿತ್ತು. For junior citizens, it was 15G. Now they have clubbed both and now they are saying 121. This is a slide which I put up for the CMAs here. Inventory valuation report by a cost accountant. Earlier, the special audit under 142(2)A. Now under section 268, subsection 5. Earlier rule was 14A. Now the rule is 171. The form, what they have asked is more or less they have retained the same thing. But what they did is the form is structured. Form structure is formalized with 18 clauses split into two parts. Assessee information in 9 clause and inventory valuation details in 9 clause. No changes. Only that email ID, contact number of the assessee has to be given. And as far as the cost accountant itself is concerned, the PAN and the firm registration number of the cost accountant is made mandatory. There have been certain changes in the tax audit report which I would not like to get into. But very interestingly, it's a form 3CD, 3CA has now become form 26. What is in and out? At least what is out, I am very happy. Impermissible avoidance agreement under the GAR is out, and certain minor things have been introduced which I will not. So before I close, let me just talk about the change in the day after tomorrow. I mean from another 16 days, the valuation of perquisites has got changed with respect to motor car silently. Now I told you that 1 rupee tax will not change. I told you reading the act. But in the rules, they have just brought in certain things. They have moved things from the act to the rules. And earlier also in the rules, for example, if I were to be an employee of HAL and I have been given a car, which is a big car, 2400cc, more than 1.6 lakh cc, whatever that is, 1600 liters. Earlier, what was taxed in my hands is 2,400 rupees per month per car. Now it is made into 7,000 rupees. So will your tax change? The answer is an yes. So please be aware of this. A lot of suggestions have gone into. This is based on the draft rules that I am telling. But if this becomes the final, I'm sure they will not keep it at 2,400, but they will increase it. And if it is with a chauffeur, plus 900 ka badle mein, it will become plus 3,000 rupees. So that is how for a big car, it will be 10,000 rupees per month instead of 3,300 rupees per month getting taxed as perquisite. So please look into the new rules, and once it comes, and those of you who are in charge of payroll and TDS, you will have to make the necessary amendments in your TDS calculations. For if the expenses are borne by employer and borne by employee, both the numbers are going up. Payroll related changes with respect to exemption. Exemption limits for perks. Exemption limit for, this is exemption. And those of you employees, if you are getting a Sodexo or some meal voucher, what was exempt is 50 rupees per meal. So we were saying 2 meals per day. 2 meals per day, that is 100 rupees into 30, which is 3,000 rupees. So 3,000 rupees used to be, although I was given a voucher, Up to 3,000 rupees, it was an exemption. Now they have increased it to 200 rupees, which is good. When whatever is there in blue is good. Exemption limit for LTC, exemption allowances, and metro cities. Good news for Bangalore. Those of you who are claiming HRA, because HRA exemption is only under the old regime. Bangalore has now been, and I'm sure Hyderabad, sir, Gupta Garu, for you have also been, your city has also been made into a metro city, along with Pune and, of course, Ahmedabad. You know, of course, Ahmedabad. Okay. So with that, I have to close. Sorry, I've taken 4 minutes extra because I have to deal with rules and forms. Thank you so much.